Hello traders, my name is Tomasz Wiśniewski, I'm a chief analyst in Alpari Research and Analysis, and this is our daily analytical report. Let me show you the calendar first. We are after the FOMC statement decision. Well, no surprises here, no surprises from the Fed, and this is causing the comeback to the American dollar. So we are coming back to the main trend that was here with for the past few weeks and even months. So the Fed didn't change the rates. Also, they described the economy and the labor market as strong. And they said they see further gradual increases to interest rates. So most probably, well, it is almost certain that we'll get a rise in December. They didn't see any problems with any data, so we do have a positive outlook. And as we said, the rises in December are almost certain, especially with the recovery on stocks, right? That was one of the concerns, but stocks are recovering, well, some of them. And this recovery in stocks should even increase the odds for the hike, and those odds are pretty strong. Anyway, those odds are pretty high. Anyway, I want to show you the calendar for today because obviously yesterday decision statement, etc. But today in 27 minutes we will have GDP. We will have GDP from UK, so important data for the British pound, and that will be it. For this week. As it is Friday, we need to check what is going to happen in the next week, right? And we start on Monday with no data as usual. Mondays are usually very quiet in terms of the data. On Tuesday, we have important data for the British pound, so average earnings. From UK, Wednesday, pretty busy. As you can see, that will be today, Tuesday, Wednesday, important for the British pound. Because on Wednesday we will have inflation, CPI inflation, and for Eurozone we will have GDP and inflation for American dollar. So Wednesday definitely the top day in the next week. On Thursday, important data for the Australian dollar, employment data for the Australian dollar, retail sales from UK and US. So the important data for the British pound continues till Thursday, and on Friday only inflation for Eurozone. So next week that will be an inflation week. We will find out the inflation from the major economy. Let's move to the charts, and we start with the euro dollar. Because on Wednesday on euro dollar we got a buy signal. As you can see, the price broke the inverse crescent shoulder formation, broke the neckline of the inverse crescent shoulder formation, and broke the midterm downtrend line here. Later we used that as a support, and the price went higher. Okay, fair enough. That was a buy signal, but it got cancelled on Wednesday. On Thursday we got a confirmation of the cancellation because the price did not manage to come back above the neckline, and also this FOMC statement brought us a drop below the long-term, the lower line of the flag, so that is definitely negative, and a comeback below the midterm downtrend line. So this those two factors, break out of the lower line of the flag and the comeback below the downtrend line, gave us a strong sell signal. The potential target now is on the lows from October and from August, and chances that we will get there are quite high, so we should touch 113 really soon. Actually, to be honest with you, the support is here, 113. That is the target for the euro dollar right now. Second instrument is euro to Swiss franc, where we do have a proper sell signal too. So what is happening here is, well, the price was creating an inverse head and shoulder pattern here. So a left shoulder head and a right shoulder. We did not get the breakout of the neckline. We did not get the breakout of the upper line of the flag, so the price went lower. Breakout of the upper red line, breakout of the neckline would be a significant signal to buy. It did not happen, and instead of this inverse head and shoulder formation, so a left shoulder head and a right shoulder, what we got was a flag. A flag was a trend continuation pattern, and the formation that was before the flag was a drop. So drop, flag, breakout of the lower line, and a drop. That is a proper sell signal. We should see the continuation of this movement and a further drop, at least towards the lows from the middle of September. So this is our outlook on Euro to Swiss franc. Now DAX. First, I will show you the hourly chart. On the hourly chart, what we do have is an inverse head and shoulder formation, so a left shoulder head and a right shoulder. The price failed to break the neckline and went lower. That is a denied formation, which should bring us a further drop. But the thing is with DAX that even with the breakout of the upper of the neckline, we still wouldn't get a proper buy signal. Why? Because there is this line which is a neckline of this major head and shoulder pattern, and as long as we stay below the blue line, the sentiment is negative. The sentiment is negative, and it's even more negative when we look on a daily chart a bit closer. Bearish engulfing on the neckline. That is a significant signal to go short. So from this point the price should continue to decline. This is my view on the DAX. Those were the instruments: euro dollar, euro to Swiss franc, and DAX from the trading sniper video. So for this short video I prepared 3 decent bearish trading occasions. Now let's analyze the rest of the instruments, on the market. And first we start with the oil, because oil is continuing the proper downtrend. This is what was expected. This is what we warned about our traders. So a further drop. So we got another bearish day here. Look at this: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 bearish days in a row. This is absolutely huge. And most probably the price will get to the 50% FIBO, and most probably from this point we will get some kind of a bounce. It is obviously the trend remains unchanged. It's bearish. But with this drop, we should get some kind of a correction. We should get some kind of a bullish correction. It is. I would be really surprised if the price continued to go down till $40 for 1 barrel this way. Now, 50% FIBO, especially that it was a resistance here and a support here, looks like a reasonable place for a take profit action, right? Look, some traders are holding short positions since $76, $72, and most probably they will like to capture some profits. A bounce here, then a comeback to 38.2 and a further drop. That seems like an interesting occasion. Euro to New Zealand dollar. Here we said about the short position. Short position is happening. Downswing is happening, and we do have another sideways trend, but it has a bearish potential. Why? Because it's more of a descending triangle. Here it was a rectangle, but also kind of a descending triangle. So drop, descending triangle, drop, descending triangle, most probably a drop. So this is an interesting selling opportunity. Risk to reward ratio is getting interesting. Why? Because if you will sell here, stop loss is above the descending triangle pattern, so 120 pips, and take profit is 240, which makes the potential profit twice as big as the potential loss. So this risk to reward ratio seems interesting. Australian dollar to New Zealand dollar, I was thinking about the recovery after this double bottom formation, but as you can see, buyers are hesitating. It's a sideways trend, so currently there is no trading signal. What we know is that we do have a horizontal resistance here. So as long as we stay below those resistances, the sentiment is rather negative, in my opinion. Australian dollar to Swiss franc, after the breakout of the major horizontal resistance, we do have a small pullback. Interestingly, there was a shooting star. There was kind of a it's not a shooting star, but you see the that buyers are getting a bit tired here. Well, the thing is that as long as we stay above the blue area, the sentiment on Australian dollar to Swiss franc remains positive. And there is a buy signal here. Even despite the fact that we are breaking this red line, it's not relevant because it's too steep, right? So it will be broken anyway, but it will not change the downtrend, the uptrend. So the uptrend remains in place as long as we stay above the blue line. So yes, as long as we stay above the blue line, we do have a buy signal. Australian dollar to American dollar is doing exactly what was expected. So here we expected the rise towards 38.2, 23.6, I'm sorry, and then a bounce. Rise and a bounce. Don't look at the time when it's supposed to happen. We wrote that as a principle. So upswing, checked. Bounce, checked. Downswing, checked. Now we'll see if the price will continue the drop or will create this right shoulder of the inverted shoulder pattern. In theory, the price should ignore the right shoulder and the price should continue to go down because that is what the trend is on the American dollar. But we will see. The thing is, on Australian dollar to American dollar, as long as we stay below 23.6, the sentiment is rather negative. Not coming exactly from this pair, but coming from the positive sentiment towards the dollar worldwide. Swiss franc to Japanese yen. Correction did not manage to aim for 38.2, and then we have a reversal. We have a comeback below 23.6. We have a flag here. And now depends. I think that this line would be more relevant here. So in theory, we do have a sell signal on the Swiss franc to Japanese yen. Euro to Australian dollar, that is a beautiful situation because here we do have this downtrend, and on Wednesday the price was creating a descending triangle pattern. And this formation ended with a bearish breakout, and that's not the only descending triangle pattern that you saw today. Probably not the last. Why? Because this formation works and is one of the best in terms of showing the principle of the price action. So descending triangle shows us that there is a rising pressure on the support, and bounces from the support are smaller and smaller and smaller, which shows us that demand is getting weaker and that sellers are taking control over the market. And eventually we get a breakout, and this breakout of the lower line of the descending triangle pattern is a proper signal to go short. British pound to New Zealand dollar as well. We were expecting the further drop and the price is going lower. Symmetric, that's a rectangle breakout of the lower yellow line. That is a sell signal. And this can turn ugly, as you can see here. That can be a proper disaster. The thing is that this drop is quite big, and we should see some kind of a correction. But the movement towards the blue line is really probable here. New Zealand dollar to Canadian dollar, nice upswing, breakout. Most probably we should see the further upswing. In the short term, what is happening? It's a sideways trend. Some may see a head and shoulder pattern here, left shoulder, head and right shoulder, but we will see where it will go, where it will lead us. The dollar index, interesting situation. So we had this head and shoulder pattern, breakout to the downside on Wednesday. That was a false breakout to the downside. False breakout brought us a reversal, so the price reversed. There was a bounce from the uptrend line, and instead of the head and shoulder pattern, what we got here was a breakout of the upper line of the wedge. So instead of the head and shoulder pattern, we got a wedge, upper line and upper green line, lower red line, that is a wedge. So we got a breakout of the upper line of this pattern, the price went higher. Yesterday was pretty good for this instrument, today is even better. Obviously yesterday is the matter of the FOMC, but as you can see, traders were positioning themselves ahead of the FOMC with the long positions here, with buying orders. And well, the price is heading higher. And look at this on a daily chart. We are coming back to this scenario, to inverse head and shoulder pattern, breakout of the upper blue line. That will be super strong buy signal. American dollar to Swiss franc, also here situation is very similar. So left shoulder, head and the right shoulder, breakout of all those necklines and uptrend lines and horizontal supports. False breakout on Wednesday, reversal. What happened on Wednesday? Elections. So those were midterm elections in the United States. What happened yesterday? FOMC. So you can see those two main fundamental drivers on the market that changed the technical situation. So it shows you the importance to know the calendar, because you may get the sweetest technical setup in the world, but still it will fail when the fundamentals will be strong enough to move the market. And on American dollar to Swiss franc, we do have a buy signal. S&P 500 upswing, correction, upswing. This is right shoulder. You can see that those inverse head and shoulder patterns, you can find them everywhere. The best thing is that they work. What we got here is inverse head and shoulder formation, breakout of the neckline, also on Wednesday. The price goes higher now, creates a flag or a wedge, is a trend continuation pattern. According to this formation, according to this breakout, what we should receive now is the breakout of the upper line and the breakout of the 61.8 and a further upswing. As for the next target, if we will manage to break 61.8, this is the pink area here. Gold is suffering. Yes, we are on the monthly lows. We are on the lowest levels in November. But you can see the light in the tunnel here, the ray of light in the tunnel here with this reversal today, even despite the stronger dollar. Again, Gold is in a deep downtrend. Price is in a flag pattern. Flag should result with the breakout of the lower line of the flag. But on the other hand, this correction can continue till 61.8, for example. But to reach 61.8, we need to break the 38.2 first. Gold is between two important horizontal lines, 38.2 and 23.6, breakout to the upside, buy signal, breakout to the downside, sell signal. Bitcoin moves sideways. We lost the volatility completely recently. They tried this major upswing in the middle of October, but since that drop, sideways trend, upswing, sideways trend. So the situation on the Bitcoin is that we are between those blue lines, breakout to the upside, breakout of the upper line of this flag, that will give us a buy signal, breakout of the lower line of the flag, that will give us a sell signal. And this is our euro dollar, already analyzed by us today. Euro to Swiss franc, and the last instrument is Nikkei. And so as you can see, S&P 500 looks alright. DAX does not look good. Nikkei does not look good as well. So Americans are always in a better situation. They always look better than the rest of the world. This is interesting. And what is happening here is we do have this false breakout, the price comes back, but this reversal looks a bit scary and most probably will get a further drop, but this technical setup is not very strong, so I will just leave it. I will show you those instruments again to wrap this situation up here and to get a clear view of what is happening here. WTI, strong downtrend. Euro to New Zealand dollar, most probably a sell. Australian dollar to New Zealand dollar, most probably a sell. Australian dollar, Swiss franc, most probably a buy. Australian dollar to American dollar, from the global situation, sell. From the technical situation, maybe a buy. Swiss franc to Japanese yen, sell. Euro to Australian dollar, sell. British pound, New Zealand dollar, sell too. Actually, let's monitor this because the breakout is happening right now as we speak. That's beautiful. New Zealand dollar to Canadian dollar, that's buy. Dollar index, that's buy. American dollar, Swiss franc, that's buy. S&P 500, kind of optimistic. Gold waiting, Bitcoin waiting, euro dollar sell, euro to Swiss franc sell, DAX sell, Nikkei rather sell. So guys, this was the daily analytical report for today. I hope you enjoyed that. Thanks very much for attending and good luck, and actually have a great weekend. Let's come back to the trading on Monday with fresh trading occasions. So all the best, guys. In the meantime, visit our Twitter account and our website alpari.news. Thanks and have a good weekend again.